Hello everyone, welcome back to my YouTube channel. My name is Karan Koli, and in today's videos we are going to understand a very important concept of Income Tax Act 1961, that is the scope of total income under section 5. This topic is extremely important for the BCom and MCom students. So let's get start exactly meaning of the scope of total income under section 5 of Income Tax Act 1961. So see in the screen, on screen I am showing exactly meaning of the scope of total income under section 5. First of all, let us understanding the meaning exactly of the scope of total income. Scope of total income refers to which income are taxable in India. In simple words, it tells us how much income will be included for tax calculation. This concept is covered under Section 5 of the Income Tax Act 1961. According to Section 5, total income include income received or deemed to be received in India and income occurring or arising or deemed to be occur or arise in India and income occurring or arising outside in India. Only a certain cases it depend upon the residential status of the individual person. So in the next slide, I am exactly sharing the exact provision of a scope of total income given by the Income Tax Act under Section 5. So there is 6 cases they given to you. So according to the cases, we exactly solve the practical illustration on the same provision. So first case is the income received in India. So the person is a resident and ordinary resident of India, the taxable income. Resident but not ordinary resident of India is a taxable, and non-resident also taxable income. And then second is their income deemed to be received in India. So again, resident and ordinary resident, resident but not ordinary resident, and resident non-resident of India. Again, three person also uh, taxable income. Okay, now all the individual peoples, and in the third transaction income occurring or arising in India. Again, three individuals are taxable who is a resident and ordinary resident, resident but not ordinary resident, and non-resident of India. Then is there fourth transaction is income deemed to be occur or arise in India. So taxable again the individual resident and ordinary resident but not ordinary and non-resident of India. In the third case, income occurring outside of India. That means is there business or profession set up outside in India, outside in India. Only is there resident and ordinary person. Resident is a taxable tax paying on this transaction. But in the case of such business or profession controlled from the India and set up in India, so resident and ordinary person and resident but not ordinary person paying the tax on such transaction, and non-resident not paying the tax on transaction, and income received by outside India, the taxable we consider the foreign income, and foreign income is only taxable only for the resident and ordinary resident of India. So with the help of those uh, provisions of scope of total income, we exactly solve is there practical illustration practical illustration of scope of total income. So is there Miss Shruti has earned the following income during the financial year ended 31st March 2024. Compute is gross total income for the assessment year 2024-25, assuming that he is he is resident and ordinary resident, resident but not ordinary resident, and non-resident. They given to you a transaction. So first transaction is resident from sorry by mistake, rent from a property in Delhi received in USA. So student all of student in first transaction rent from a property in Delhi received in USA. Delhi is a part of India, and the Delhi is a city of India. Therefore, we can say that is there all the case in all case income is taxable 80,000. and 80,000 because income is arising in India. Income in that case, income is received in USA, but income exactly arise in the India. Then again, in the second transaction, income from a business in USA, control from Delhi. So this business control from the Delhi. So business set up in USA. So business control in Delhi. Therefore, the second transaction rupees 90,000 and 90,000 is taxable for the resident and ordinary resident but not ordinary resident. Is there not taxable? Not not taxable for the non-resident. Okay, all of student. And then the third transaction income from a business in Mumbai and control from USA. But yes, all of student. Business setup in the India. That means income arising from the India from Mumbai. Therefore, rupees 1 lakh rupees 1 lakh is taxable for the resident and ordinary resident, resident but not ordinary resident and non-resident also. Okay, all of students. Then in the third, fourth transaction, rain from a property in USA, but later remitted to India. So all of this income transaction number four only taxable rupees 1,10,000 for the resident and ordinary resident. Okay, because latter remitted, but income is actually received in USA and generated property from the USA. So we consider this is equal to our foreign income. So therefore, the transaction only taxable for the resident and ordinary resident and the but not ordinary non-resident transaction is not taxable. Then again transaction number 5 interest from deposit with Indian bank in India. In the Indian bank in Mumbai. So Indian bank interest received rupees 1,20,000 is taxable for the resident and ordinary resident 1,20,000. 1,20,000 again resident but not ordinary resident and non-resident also. Okay, so let's see in the transaction number 6 in income received in USA but service rendered in India. Transaction number 6 rupees 1,30,000 taxable for the resident and ordinary resident, taxable for the resident but not ordinary resident and non-resident also, because the service rendering from the India, that means service rendering from India means is there income and product is there selling from the India, so generated from the India. That's the reason behind it. Key income received from USA, services rendered in India, taxable for the resident and ordinary resident but not ordinary and non-resident. Income from agriculture in Sri Lanka. So all of students, Sri Lanka is our neighbor country, but is not uh, a India Indian area. Okay, now that's the reason only resident and ordinary resident paying the tax on such transaction, and again both but not ordinary resident and non-resident is not taxable. And again all of student pass untaxed profit on outside India brought to India. So past profit in this transaction, in this case we are only computing the income of Miss Shruti of previous year on the basis of previous year income, and past profit is not previous year profit. Therefore, the past profit income is not applicable is there. So again, not taxable income, not taxable income, not taxable income for the resident ordinary resident but not ordinary and non-resident of India. So exactly this is exactly uh, solution of this practical illustration. So again I'm explaining rent from property in Delhi received in USA, income generated from India. That's why the transaction is taxable in the resident, ordinary, resident but not ordinary and non-resident. So, according to the transaction and provision of the Income Tax Act 1961, section number 5, we is there exactly solve the practical illustration of the scope of total income. Thank you all of.